Welcome back to another episode of Fun Friday. I have a very special guest here. He is one of our incredible asset managers. But before I get into that, I'm going to do a shameless plug. As you may know, if you see our email list, we are officially in the promotion season for our New York City flagship summit, our conference that we love. We said we weren't going to do it, but of course, we are in fact going to do it. Bigger, better, and bolder than ever before. I am supremely confident this will be the best edition of the summit, the best attendee list, the best capital allocators there, the best institutional family offices there, the best sponsors there, the best vendors. So if you're in the syndication business, if you're in the real estate business, particularly the commercial field, and you're looking to level up your network, this is where you do it. The agenda is going to be utterly dialed September 14th and 15th. If you need some more information about it, please email me, Craig, Craig, at LSCRE.com. Once more, the flagship summit in New York City is a go. You're going to want to be there. Okay, now on to the show. A very special guest, Joseph Pistorius, our incredible asset manager. He, like me, went to the most prestigious school in the Southwest. Many call it the Harvard of the Southwest, the University of Arizona. Bear down, go Wildcats. Of course, we fell short in the tournament, as we always do, but we're not going to talk about that here today. Joe has done incredibly well in his short stint, or not too short. I mean, you've been there for the company now just shy of a year.
10 months? 10 months?
Yeah, but has made an incredible impact to this point. And he's an asset manager. And I think what I really want to do here is have a conversation to spotlight how crucial the asset management role is. And asset management can vary from company to company, from role to role. I think a lot of times with applications, what someone under some title does at Lone Star is perhaps different than what you've done maybe elsewhere, what another company would do it as. But before we get in kind of your day-to-day responsibilities, it would be incredible, Joe, if you could just kind of let everyone know, paint the picture, get the canvas going about your professional background prior to joining up with us at Lone Star Capital.
Yeah, absolutely. So I guess just to start off, I've been at Lone Star for, like you said, about 10 months now. But prior to that, I was at Alliance Residential, a large multifamily developer all over the country. I think, in the past 3 or 4 years, they have been in the top one or two developers and owners nationwide. So had a lot of experience there working under our CFO and our managing director of transactions, just doing anything from asset management work to underwriting prospective new deals to helping out on the transactions front on the disposition side and the buy side. Really just kind of being a jack of all trades position there for a little under 4 years before heading over to Lone Star and diving into this asset management role head on. It's been a great experience moving out to New York and joining the team.
So, Joe, did you do that as your first job following the University of Arizona?
So I did not. That was I had a brief stint in the wealth management space coming out of school. Did that for about 2 years. COVID hit. Whole bunch of other things started to change in that industry, and I realized that I didn't realize that I wanted to get into real estate. I knew I always did, but it kind of push came to shove, and I wound up at Alliance, and then life brought me to New York, and now I'm here.
Yeah, well, that's awesome. And I think your background from how you displayed it to me prior to working with Lone Star was, hey, I've got a really solid kind of GE, if you will, a really solid general education pertaining to real estate from an institutional perspective, from a very known, reputable brand in the business. So you probably took a lot of that skill set, but now you're kind of doing more of one thing, not, a couple of things, which I think generally better to specialize. But now you're doing asset management. And I think so often it's so important to think about who the asset managers are, who the ones who are responsible for managing the day-to-day of these properties, because we can do such a great job of kind of financial modeling a deal, buying it right, going through the process, soup to nuts really well, getting it for, a fair market price, not overpaying, not underpaying, but just a solid deal, getting that locked up, putting together the sexy pitch decks and whatnot, having someone like Sam Morris or myself or Rob giving you a great webinar and kind of putting the sales pitch on. But then the deal's closed and you have to manage it. So for myself, for Sam, I guess Sam will be more on the asset management side of things than I will wear, but I just wear the hat of raise capital onto the next deal, build relationships, so on and so forth. But then it's Joe who is really doing the management, and then his work begins. So at this point, Joe, how many properties in the portfolio are you managing? And if you would like to name some of them, that would be awesome to do, because many of our investors and capital partners do obviously listen to the show.
Yeah, absolutely. I'm going to take just one step back here and kind of say, so, you know, the underwriting is the underwriting, and it can be as crisp as you want it to be, but you have to have someone to act out the underwriting once the property is in your possession. So really working with Brad and the rest of the team to understand the underwriting, and we have gotten a lot better about that just in the last year or so, working hand in hand together to bring forward the results painted on the onset. That's been a great part of joining Lone Star and helping kind of see that come to fruition. Secondly, there's, you know, the narrative painted by yourself, by Sam, to all the investors, and that narrative is only as strong as the property performs, and that's, you know, where I come into play, and making sure that these properties are living up to that narrative that you paint when selling the deal, and living up to the underwriting that Brad put together to, you know, make it come to life. So that's kind of where the asset manager falls into the org, if you will. I think the asset management position is kind of the catch-all at Lone Star. There it is. When Dasha comes to me with investor relations questions, I'm the one who has to answer. When Brad comes to me with budgeting questions, I'm the one that has to answer. When, you know, when Rob is looking for certain details that are a little bit more specific into the property itself, you know, that's up to me and Sawyer to provide those answers. So to kind of go into some of the properties that I'm overseeing, I think one that's worth mentioning is one of our more recent acquisitions, and that's Preserve at Copperleaf. You know, we originally took it over in May. Is that right, Craig?
Yeah, that's right.
Okay. Yeah. Sorry. That was just the month before I began and kind of stepped into that. We had a fairly seamless transition, saw a little bit of turbulence heading into the winter months, but we actually recaptured the old Onsite team after a few months of not having them back in place. And since then, we really turned it around. And I think we're sitting at like 98% occupancy as of the last 3 months. And we haven't had a single dollar in delinquency since October. So that property is a great example of something that's really just humming along. It's also an example of a property that, you know, it makes my job a lot easier when the on-site team knows what they're doing and is very competent. When I ask for something or when I am looking for some bit of information, to have a team that I know is capable and is able to report back timely and effectively is kind of it's the best thing that you can look for when
Yeah,
hiring on-site staff.
yeah, and that's a really important thing, and that really is, you know, when we look at these deals, taking a step back at, you know, kind of a 1,000-foot overview, if you will. When you buy a multifamily property, you're buying a X amount of $1 million business, and businesses are ran by people. The people are the community managers. The people are the leasing agents. They are the maintenance staff. So you've got, you know, X amount of employees running a $50 million business with, you know, the overall parent company owning the property, aka Lone Star Capital. So there's a lot that goes into it, and it's basically the asset managers, you're painting it out, it's job to make sure that train is on the tracks, we're hitting the business plan. If we have a, you know, kind of a plan to renovate the property, hey, well, does it still make sense to do it? Because sometimes life kind of throws you a curveball. Sometimes the market throws you a curveball, and maybe you can get your return on cost without having to do any value add to the units. And then now you can sell the property to the next owner with the value add plan, and you can get a better price for it. Maybe, you know, you think you're gonna, you know, do no value add, but it turns out that the property up the street actually has, you know, proof of concept for some of these units. So you do a couple of them and you can sell it off. So you got to be nimble in these times, and having someone like Joe on kind of the site, having someone like Sawyer on there, with Ina and Rob and Melissa and Tammy kind of all working through there, kind of some of that team there is super crucial. So being nimble, being smart, knowing the room, knowing the market, will allow us to kind of make sure that, as you mentioned, the underwriting, which are just said projections, will actually be hit or ideally exceeded. But with that said, number one, could you give the name of the properties? You obviously just mentioned one. formerly known as Cortland Copperleaf, now known as Preserva Copperleaf, or Preserva Copperleaf. But could you give the list of the properties that you are currently managing for us, please?
Yeah, sure. I'll run down the list alphabetically here. It starts with Five Oaks, then it's Beckley, Briarcourt, Broadstone, Highland, Lakes at 610, Madison at Bear Creek, Meritage, Preserve at Copperleaf, Regency Grove, and last but not least, Timberwalk.
Wow. Even
So,
alphabetical, you were really on the dot.
yeah, I think it's a little over like 2,500 units.
Yeah, that's a lot. Well, you obviously got your hands full, and I'm sure you're super excited for quarterlies right now, which this is being recorded in April. When this will be released, I'm not 100% positive, but nevertheless, could you go through your high level asset management responsibilities?
Yeah, absolutely. I think, number one, first and foremost, and it differs from group to group, but here at Lone Star, we run a relatively flat organization. So big part of my day to day is really just managing the property and its on-site teams, really working hand in hand with the CMs and our director of operations to make sure that everything is running smoothly on a day-to-day basis. So that is, having weekly calls with the community managers, and those calls can be anywhere from 30 minutes to like 2 hours. It just depends on what's going on that given week. What challenges are we facing? What obstacles are we trying to overcome? Are we setting our goals correctly? At the beginning of every month, we set our occupancy goal, our collections goal, our delinquency goal, and our paid up units goal. So those are four of our key metrics here at Lone Star that we look to hit on by the 31st or whenever the end of the month is, and then resetting those, recalibrating those. That's kind of the main focus for me at the on-site level. The second thing is, working with lenders and investors, providing them with any details that they need, monthly reporting, quarterly reporting. Lenders are constantly asking us questions, whether it's in regard to an insurance claim or anything that they might need from Fannie or Freddie. It runs the gamut, but you are kind of always interfacing with them, answering their questions and having a general understanding of the property. So, when you get reached out to, you aren't caught flat-footed. Trying to think of what else. Those are kind of the main two things. I really think it's and then regards and on the other end is just working with everyone in the office.
Yeah, and then also managing hiring and firing staff as well. I mean, that's one thing
Absolutely.
that, when we had these conversations, when I was kind of speaking with some potential candidates who would potentially, come in for the asset management role, I just asked them point blank, is like, hey, are you going to be comfortable with hiring and firing and managing a team? Because at Lone Star Capital for an asset manager, that's exactly what you're going to be doing. And can you kind of command a room? Do you have the confidence to do that? Are you going to make cuts? Are you going to get emotional about it? That's a very difficult thing to do. It's not for the faint of heart, and it's a very large responsibility. And that's why, when it comes to the property and whatnot, hey, Brad, obviously he's going to help and oversee it, but I'm done on these things. So I really have to feel comfortable and rely upon you and Sawyer and kind of that organization, that side of the team, to make sure that this goes accordingly. Otherwise, my job of capital raising becomes a lot more challenging. And,
Of
the
course,
best
yeah.
companies have the best asset management. The best asset management teams deliver upon what we said we're going to do time and time again. They think quickly, they pivot, they adapt. So having someone like Joe is super, super valuable, obviously, because, he's the tender loving care that the property gets when, it's past, on the takeover side of things. So with
Yeah,
that said, yeah, you go.
no, I was just going to say, I think touching on hiring and firing, just the whole process is definitely another key element. There's the goal is to not have to hire and fire, but unfortunately, it is part of the business, and turnover is natural. Lone Star's goal is to try and keep employees as long as possible. And I think one thing that we are trying to kind of revolutionize in the space right now is the way that we structure our on-site teams. There is a general trend in the industry to have the leasing agent be the entry role into properties, and then you work your way up to an assistant role, and then ultimately you become a community manager, property manager, whatever you prefer to call it. The idea is to, right now, it seems it's odd because the leasing agent is, you might have a great leasing agent who's incredible at sales. They're incredible at bringing in leases, at signing renewals, but then they move into an ACM position who is a little bit more of a bookkeeping role, a lot of back of house duties, and that's not what this person is designed to necessarily do. It's not how their brain is wired. So something that we're kind of trying to roll out and bring to the forefront is rewarding some of these better leasing agents that are this sales type of person, and having them grow in that role and not just throwing them into something that they might not necessarily want. So going forward, something that we're really trying to focus on is promoting the individuals that are both on the CM track and on the leasing and sales track, and rewarding them for what they're doing best.
Yeah, and I think kind of what I'm hearing there is making sure that we are making sure the right talent is in the right position, the right brain type, the right personality type is doing the correct thing for how they're wired. And this kind of stems back to the overarching theme, which is culture index at Lone Star Capital, and making sure that
Mm-hmm.
you wouldn't put Craig McGrouther, speaking third person here now, but you wouldn't put me as an accountant. You would depress me, you would crush me. Similarly, one might think, oh yeah, natural progression, leasing agent to community manager, which is basically what we call a property manager. Well, that might not be the right fit for obvious reasons, because the sales role is not a organizational role there, if you will. So why would we put a square peg in a round hole there? So making sure that the right human capital is doing the right thing and paying people accordingly, and paying them extremely well is the goal here at Lone Star, and obviously making sure that they have a great experience top to bottom. So I appreciate you kind of noting that there and making sure that we have that, because it is super important. As I said, you buy a $50 million property, you own a $50 million business now, and who you have at the helm is super, super crucial. Segueing on to the next thought here, which is how different properties require different care. Super good thought there, because if you're buying, let's say a deal that's a 70s deal or 80s deal versus a thousands deal, you're going to have totally different building grade, different construction. So can you expand on that a little bit more as to what that means for you? Because you obviously mentioned a very long list, what, 2,500 units that you're managing, all different
That's right.
vintages, different years bought, different debt structures for the, relatively speaking. So can you kind of go through, how you kind of go through your process there?
Yeah, absolutely. So, it's different properties require different amounts of care. So, obviously, an older property is going to have more issues on the maintenance side of things, whether it's plumbing or HVAC or various things breaking down. You're constantly running into things that you wouldn't be running into in a newer deal from, let's say, 90s or 2000s. So kind of what happens is when you start to amass a portfolio, you'll find that a lot of time ends up being spent on some of these older properties where you are just kind of you're facing a lot more challenges. The newer deals tend to just run a lot smoother. So like I was talking about earlier with Preserve, we have a great team in place. There isn't a ton breaking down. You know, I don't talk to that team as much as I talk to a team that is running, let's call it Broadstone. Broadstone has been through a lot in the last 6 to 8 months. The team there is incredible that we have in place, and they are doing everything they can to bring it back up to stabilization, given all of the hardships they've faced. But I spend a lot more time dealing with them because there are plumbing issues. There are HVAC units running out left and right. The overall demographic just proves to be a bit more challenging on an older deal. And with that being said, there's just a lot more to manage. So as an asset manager, it is helpful to have a balance of some of the not easier properties versus harder properties, but kind of understanding that you don't necessarily want to overload yourself with a bunch of properties that are 30, 40 years old. It is not necessarily a job for one man.
Yeah, well, with that said as well, I mean, when you look at on-site teams, you look at your position, You don't want to have burnout. You want to make sure that you have breaks, that it's not super time intensive. I'm sure if you had a bunch of properties like Preserve, it'd be nice, but you might be bored and want to get your hands dirty and
Right.
focus on some projects that might require you to flex your muscles a bit and kind of, I guess, for you to really focus and solve problems. I think at the end of the day, we all want to do that. We all want to kind of provide value there, but too many of those on the other side of the token would kill you, but too many easy problems or properties would make your life too easy. So there's a fine line there. And I guess with that,
Absolutely.
yeah. And I think, as you said there, calling it 70s, 80s, 90s, 2000s deals. Are you noticing any general industry trends right now pertaining to those specific deals? I guess with years and such.
I think that it's kind of an interesting time right now. Well, specifically as of this recording, and we just talked about this with the whole team, but it's been slow over the last 6 to 8 months from a deal flow perspective. And
Acquisitions. Yeah. Right.
yeah, and it seems like maybe the faucet is turning back on. It's always kind of hard to say, but as we move forward from Lone Star's perspective, I think the vision is to generally start buying nicer, newer. It's not about phasing out some of the older deals, but just streamlining our work efficiencies and understanding that we're going to look for a deal. We're going to look for the best deal at all costs. Whether it's a 70s deal, an 80s deal, or a deal from the late 2000s, we're going to do whatever's best for the company and our investors. But I think going forward, just speaking broadly across the industry, a lot of people are looking for, those 90s deals, those early 2000s deals that are, don't require as much TLC.
Higher ceilings, probably better plumbing, better materials,
Right.
potentially better located. Makes a lot of
Yeah.
sense.
And I think one more thing on that also is, I don't want to discourage older deals from, I don't want to take away from their value. I think that while it does require more work, if you do have a good team in place on the corporate side and on the on-site staff side, everything kind of falls into place. There's always an opportunity if you have the right people making the right decisions.
I agree. And the other thing to think about too is this is all an economic value exercise. So if the deal is super ripe, we find, there to be an older deal, like let's just compare and contrast. Grand Riviera in Dallas. We love that deal. That deal's performing very well. It's an older deal. It had really large square footage. There's a story as to why we acquired that deal. On the other side of the coin, we're also loving the 3 deals we acquired last year from Cortland, Preserve, Med Center, now known as Lace 610, and Vizcaya Apartments. So those deals are all great. We think they're all going to do just fine. I couldn't tell you which deal is going to do the best. I mean, I think maybe Cortland Preserve would be, because that deal is kind of an anomaly. But excluding that deal, we don't know what will perform best. So it just goes to show you just don't know what the best deal may be. And also every deal requires, different love and needs and staffing. So I guess for, let's say a 70s or 80s deal, right? Would you likely need another maintenance person for those deals? Because, one of the biggest ways to keep retention on is having a really, really active and can-do attitude and a very prompt on-site, maintenance team and stuff. So, do you have to have extra employee personnel depending upon the age of a property?
You definitely do. So at some of our older properties, there is where there should have normally been 2 people, there probably is 3. And that is solely due to the fact that it is cheaper to have a third make ready or assistant maintenance supervisor than to be constantly outsourcing your plumbing, your random repairs, make ready, turning units. It's generally going to be cheaper to have a third person on site than to be constantly outsourcing your workload.
Makes sense. Joe, what would you say? This is like a perfect segue. What drives operations on an on-site level? Is it, team, personnel? Can you walk us through that, please?
Yeah, absolutely. I think a great example of that is our property Five Oaks. It's up in northern Houston, and it's a perfect example of a somewhat older property that is just running very seamlessly. We brought in a new team about 6, 7 months ago, and since that point, Our occupancy is back towards stabilization. Delinquency is down to the lowest it's ever been. We just received our highest month of collections since acquisition almost 2.5 years ago. And that's largely due in part to the fact that we have a great community manager there with an assistant by her side holding down the fort on everything resident wise, and a strong maintenance team that's been at the property since long before we acquired it. They just know the ins and outs of the property. They're wonderful, and work orders are always low. Anything that we kind of need to maybe outsource sometimes, they are always, no, 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 we can do that. We can do that. Having a team that you can trust is vitally important.
Yeah, and I think when we get to scale here as well, and we do part ways in some of these deals, the biggest thing we are looking to do is retaining our great people, because great people will thrive at any property, at any location, in any market. It doesn't matter. But having the kind of can do attitude, the resilience and grit to get some of these problems done to help people's lives is great. Because at the end of the day, it's all about a community, and you got to have people live at the community. You got to give people a better and enhanced living experience. Or when times come right now, they're going to be looking to trade up and move up or change different apartments with, the latest and greatest special going there. And one big thing, which is a perfect segue into the next thought here, is making sure that we retain leases, which is a paid up rental, I believe is what we call it, like a pup, something like that. But
Paid up
nevertheless,
unit.
a paid up unit, exactly. So a paid up unit, PUU, super important here. But can we talk about the reward for leasing in a new way, and then also just maybe the idea behind paid up units and kind of the newest, latest, and greatest tips there?
Yeah, absolutely. So I think another thing that is probably unique to Lone Star is this paid up unit structure. So depending on the company, on-site staffs are generally paid a bonus, whether it's biannually, annually, quarterly. We actually do it monthly, and that's based on the paid up unit structure that we have built. What we do is we take a rent roll at the end of the month. We categorize it by the delinquency per unit. So any unit that owes less than $5 at the end of the month is considered a paid up unit in our books, and the team at the property is measured based on those number of units. So a paid up unit can be defined by, or you can add to a paid up unit, I guess I should say, by leasing. So if you lease 15 units in a month, that's 15 brand new paid up units to add to your total at the end of the month. If you have 20 units over $5 in delinquency on day 15 of the month, and then at the end of the month you have 3, that's 13 new units to add to your paid up units at the end of the month. So it's working both the collection side, the leasing side, the maintenance side, because at a lot of our properties, maintenance is key. People kind of get frustrated, and when we have a great maintenance team, people want to stay on our properties. They want to pay. They want to renew. They want to be a part of our brand and continue to live on a Lone Star community.
I love that. And then we're also kind of going through new ways than the traditional way with regard to leasing and getting people there. So can you talk about maybe some of the new ways and the new strategies we've been working on to kind of implement best practices with regard to getting and keeping new tenants?
Yeah, absolutely. And I kind of touched on this earlier in regards to the 2 tracks that we are trying to make for our on-site teams. But again, to kind of touch on leasing and where we see it moving in the future is, everyone has their apartments.coms, their rent.coms to attract people online. But I think as millennials and Gen Zs grow up, like myself and Craig, we look at everything through a social media lens. My girlfriend and I, we found our apartment on TikTok when we were moving to New York. And a lot of people do the same in every city in America at this point. It's just kind of the new age. So really staying on top of the times and adapting, constantly evolving with the environment, getting our on-site teams educated on how to use all of those platforms is only going to help us lease better.
That's amazing. So you're basically leveraging social media in the new world, not using the old kind of apartments.com or stuff like that, or the Craigslist, if you will. I mean, I'm sure we are doing those things, but above
Yeah,
and beyond that, how can we get creative and unique and kind of
yeah,
integrate
we're
with the latest and greatest? It
we're trying
sounds
to
like.
attack leasing from every angle. When if you the more darts you throw at the dartboard, the better chance you're gonna hit that bullseye. So the other thing is we're hosting calls with some of our better leasing agents who are training some of the other on-site teams to get better at this stuff because they are proficient. They are really tuned in with how TikTok and Instagram work, and we're kind of just trying to build a full marketing community within Lone Star.
I love that. And then another thing I want to talk about right now, and this is very topical because there is more supply going on now than ever before. There's a lot more competition. What happens when there's more competition? Well, there's a lot more concessions. So, can you kind of break through concessions and kind of talk through that and maybe why it's not so simple?
Yeah, sure. So I think concessions is somewhat misunderstood when investors are looking at concessions on a rent roll. They're like, why are we charging so many concessions over this month, this 3 or 4 month span? And it could be for any number of reasons. It's not just a simple catch-all fix when a property isn't performing. Uh, you know, some people might think, oh, if leasing is slipping, just offer a concession, but it doesn't necessarily work in that manner. So you have to be careful about how you price yourself into your environment, depending kind of solely on what the competition is doing. If you just go, oh, well, I'm just going to offer a full month rent concession in the month of July to try and capture leases, well, you could have all of your competition be doing 2 months, and then that doesn't do anything for you. Or you could have your competition be doing a no app and admin to really kind of get people in the door. And if you're only offering a half month rent, they're probably going to go to the other place because it's an easier entrance. You really just want to be smart about your concessions and how you're pricing them because it is solely dependent on the competition around you, and it's not a just blanketed, we're doing this because I think it's a good idea. You have to really be in tune with the sub markets, understanding where you are in regards to your competition, and being smart about it because you don't want to constantly be running concessions, and then it can really affect your bottom line. But you also need to be doing them correctly because you don't want to lose that occupancy.
Yeah, I think concessions are scary for a lot of people, but the reality is that if you own a property during a market cycle, or if you own a property for more than 6 or 7 years, you're going to run into a window where you do have to get kind of creative and competitive and maybe kind of discount where you'd like to be. Unfortunately, that's just the inevitable nature of the apartment business, the rental business. And it's not just exclusive to multifamily. There's, deals running for anything, whether you're buying houses, there's the buy downs, whether you're looking to rent a house, maybe they'll give it away for a discount here or there, right? Or they want you to start at a certain time. So got to get
Yeah,
creative, and it's more of a renter market right now than ever before, but that will start to change. And just to be honest though as well, the other thing to think about is every sub pocket is different, right, Joe? And I'm sure you've experienced some properties depending on the vintage and whatnot, there's no concessions, there's no problem. And then there's other properties where, hey, you got to do, whatever you're doing, it's not enough and you got to get more creative. But a lot of your
sure.
role as well, I just want to paint this picture, is really really dynamic because you need to not only know what's going on in our property, but you probably need to know what's going on in a square mile radius and where we're missing the mark, and kind of be
Yep.
kind of the foot or the boots on the ground with regard to where is this property landing, what are they offering, how are they doing it, where are they at, right, where are they missing the mark, where can we get our competitive edge. So for you to be smart like that and dynamic is important. And the asset management role is so crucial because all those things mentioned, it's truly a dynamic position, and there's a lot of complexities day to day. So I imagine no 2 days the same. Can you kind of just walk through some of the variability in your day to day there, if you will, whether it be kind of traveling to Texas or speaking with certain people? I can't imagine any day is carbon copied.
Yeah, definitely not. It runs the gamut of people you talk to and just random tasks to be done. But to go back really quickly, I wanted to touch on one more thing that here at Lone Star, our goal is to have every property, be renewing at a 60 to 65% rate. That's kind of across the board a pretty high mark for renewing at multifamily properties. And if we have a great on-site team and people love to stay at our properties and love to renew, that upfront concession is not going to hurt as much in the long run if we have people staying 2, 3, 4, 5 years at our property. But to go back to your original question and just regarding the day to day, you know, I can't even begin to describe. I try to start my day the same every day when I walk into the office, but that very quickly changes because I think by 10 a.m. I've probably already had 14 or 15 calls from anyone from a property manager to the maintenance team to a lender or investor or Craig or someone just asking me a question. You can be as organized as you want, but it generally kinds to run away from you by about the mid afternoon. One thing that just recently changed my life is Dasha told me about inbox zero. I don't know if you do that.
I do it to the best of my ability. Some stuff I kind of poach to email back more methodically, but I won't archive the email. But yes, inbox zero. I had to get cracked into shape there because I never used to delete emails. I just have an inbox and it was read unread. I used to do it that way. Am I not the only one then in the world that was doing it like that as well?
I've never deleted an email until
Same.
Monday morning,
Don't
and then
delete the archive.
Yeah, it's an incredibly freeing experience, and I mark myself as a pretty organized individual. You kind of have to be to be in this role because you're balancing so many plates, but you're spinning so many plates. But yeah, this inbox zero thing has kind of changed my life. It allows me to respond at a higher rate, to constantly be engaged with the people asking me questions and getting back to them as soon as possible. It's kind of the other thing to touch on in this position is because it's so varied, because there's so many things going on a day-to-day basis, the level of organization required is very high because you have to be constantly thinking about, oh man, like that fell down on the priority list. I need to bring that back up now that I've done these other 3 or 4 things.
Yeah, I think that's really well said, Joe. And that's not just exclusive to yourself there. That's kind of a theme within Lone Star because we are a small but mighty team in the sense that we have to wear a lot of hats and our roles can vary from day to day. You might be talking to a maintenance person, you might be getting a storm prep ready to go if there's a hurricane coming in or a nasty rain setup going to come where there could be some flooding. We obviously try to buy deals that are not in floodplains, but you just never know. Even deals not in floodplains can have some standing water here and there, particularly in Houston. Then there's times where you're speaking to investors and speaking to our capital raising partners, and you got to wear that hat, right? And you got to know what to say and not to say in certain respects and whatnot. But you also see the nasty side of things, but still staying positive. That meaning, kind of the nitty gritty of it. And those who are so close to it sometimes are the most negative. But then you just realize, well, that's just not subject to only our deals. That's the entire industry and the business and the job that you're in. Similarly, on my end, I could be sending out stuff. I could be kind of selling someone on our latest and greatest deal. I could also be coordinating and setting up our next events or setting up meetings for whatever conference we're at, right? So it's very much so, whether it be your job or my job, a varying upon a day-to-day thing, but that's also some of the fun in it, that you're not just doing one thing time and time again. You get to exercise different sorts of creativity and different skills, which is super fun. And then obviously working directly with the high-end people, or just working directly with the founders of the company is a pretty unique thing as well that not a lot of people get to do, which is super cool. Joe, is there anything else that was potentially missed that you think deserves some mentioning or some shining before we wrap up the conversation here?
I don't think so, Craig. I think we kind of covered it all on this call.
Yeah, no, well, I'm super, super happy that you got to come on to the show. Joe has been killing it for our team. I look forward to working with him indefinitely within the Lone Star kind of name and brand there, if you will. Thank you so much for coming on, Joe. People want to reach out to you if they want to learn more about you and, kind of your experience with Lone Star or have any questions specifically about properties. Where can people find you?
You can find me via my email, joe@liveatlsc.com. Feel free to reach out. What information am I supposed to give here?
You can give LinkedIn if you want.
LinkedIn.
Yeah.
LinkedIn, Joe Pistorius.
Excellent. I think that's it. Awesome, my friend. Well, Joe, thank you for your time today. We appreciate you. Looking forward to having you being a recurring guest on the podcast. Incredible debut and looking forward to more.
Looking forward to it. Thanks, Craig.
Everyone, buy your tickets to the Lone Star Capital Summit, September 14th and 15th. reach out. It's on the website. If you need any more information, email me. We appreciate you. Peace.